and welcome. This is Accounting 1. We are working on Chapter 5. In this chapter, we're going to learn about the cash control systems. So in the past, we've learned our debits and credits. We've changed from our T accounts. We put everything into our journal and journalized it. Then we have posted from our journal into our general ledgers. This chapter is a little bit different. We're not going to be doing so much with the journals or the ledgers, but we are going to be working with our cash control systems, which is basically dealing with our money and our cash and our banking. So in this chapter, you are going to learn to prepare a check stub, fill out a check, a deposit slip, do a bank reconciliation, and endorse checks. You will be able to journalize the entries for voided checks, bank service charges, dishonored checks, electronic fund transfers, and debit card transactions. You will also be able to journalize entries to establish a petty cash fund and to replenish that petty cash fund. So the first section, 5.1, is about checking accounts. And this section is fairly long. And so we're going to talk about how businesses use cash. Now, I refer to cash a lot when we are working in accounting. We actually have our cash account. And so in accounting, it's important to know that all money is referred to as cash. It doesn't matter what kind of form it's in, but we always just call it cash. If you are making a major payment, however, you never use cash, you always write a check. But when we write a check, we refer to it as paying cash. So if I say pay cash for something, or if I say we write a check for something, I am basically saying the same exact thing. There are some problems with using cash when you're working with a business. First of all, it may be harder to track. Maybe you don't keep your receipt. Maybe you don't write it down. You can't trace it back to the source. So cash is not good because you can't track it and find out where all your money has went, down to the very penny. And also, you might just lose it. So sometimes I misplace money. It's not a good idea to use cash when you're working with business transactions. So on the page 118, in the little blue character counts box, I want you to go ahead and pause the video right now and go ahead and read the business codes of conduct and think about what you would have your answers to be. So go ahead and pause. So in that section we talked about Merrick and it talked about their code of conduct. So what is the definition for a code of conduct? A code of conduct is a statement that guides the ethical behavior of a company and its employees. Okay, the next question is, what is ethical behavior, or what does ethics mean? Sometimes you can violate ethics of a company or of a personal ethics without actually breaking the law. For example, if I were to give you all the answers for this chapter's accounting test, but I don't give them to anyone else, they may not necessarily be illegal according to the law. However, that is unethical according to my personal ethics and according to the ethics of my school and of education in general. So your ethics is basically doing the right thing, treating others as you would like to be treated, or the golden rule is sometimes how people refer to ethics. And so the code of conduct is the statement that guides the ethical behavior of a company and its employees. Every company should have a code of conduct so that the employees can read specifics about their company, about what is acceptable and what is not acceptable. For example, in this one we were talking about Merrick's code of conducts. If you went online and read their code of conducts, you would have been able to, when you were looking at the questions, question number 1 said, if you give a physician a gift consisting of a medical textbook, would that be considered unethical? No, that is not considered unethical. A medical textbook is not an excessive gift. However, on question number 3, it said, as a doctor, could you accept a supplier's invitation to attend the Super Bowl? That would be considered unethical. The The reason why that's considered unethical is because that gift would be considered excessive, and perhaps that supplier who is your drug supplier, they're giving you that gift of the Super Bowl tickets because they really want you to purchase their products. And once you've accepted that gift, you maybe feel more obligated to purchase the drugs from their company as opposed to a different pharmaceutical company. Okay, so back to your notes. As a safety measure, most cash is kept where? Well, it's kept in the bank. That's the safest place for it. This is going to provide proof or evidence to support accounting records. Because we keep it in the bank, we're always writing a check. That is going to give us our proof or evidence. You can also compare your records to the bank's records to make sure that everything is the same. If your records and the bank records don't match, then there may be a mistake either on your part or on the bank's part. Next, I want you to write the definition for a check. Many people know what a check is, however, the accounting definition can get confusing, so go ahead, pause the video, and write out the definition for a check. Okay, the definition is a business form ordering a bank to pay cash from a bank account. The business form ordering a bank to pay cash from a bank account is a check. So let's go ahead and define what a checking account is. A checking account is a bank account from which payments can be ordered. When a checking account is opened, all the people authorized to write checks on that account must provide a signature. So when you go to open a checking account, everyone who is allowed to sign your checks needs to sign a signature card. When you put money in your bank account, it's going to be called a deposit, and you will fill out a deposit slip. After you've made your deposit, a receipt is given to the customer. So that way you have a record of what was deposited into the bank account. So we're going to fill out this deposit slip. Deposit slips are different depending on where you bank. Deposit slips also can come pre-printed with your name and account information on them. So the first thing you're going to do is fill out the date, the name, and the account number that the money should go into. So for this example, it is August the 1st. Our company is Techno, and our account number is 453119. Now, the account number is going to be given to you in all of your accounting transactions. You're not going to have to know what that is. The next thing you're going to do is fill out what you are depositing. If you had cash, you would actually list the total amount of cash here. And if you have checks, you're going to list the checks and the amount each check is for. Now, in accounting, this is done differently than in personal finance, or how most businesses do it in general that I've worked with. In your personal checking account, you would actually write the name of who gave you the check over here and the amount in here. That way, if I wanted to go back, I could always see where did this money come from? Whose checks did I deposit on this date? However, in our accounting book, instead of writing the person's name the check is from, we actually are writing the bank routing number that check was written on. And so this is always shown on the check, and in your accounting papers it's going to be given to you. So we wrote who the check is from, the amount of the check, which is $5,000. We don't have anything else, so our subtotal is $5,000. Less cash. If we were taking out a cash withdrawal or keeping some of the cash from this $5,000, we would put the amount in here. We're not. We're depositing the whole thing, so we'll either write 0 or draw a line through that. And so 5,000 minus 0 is going to give us our total of $5,000. Okay, now that we have deposited our money into the bank, we need to record it Each time a deposit made is to be recorded on a check stub. Now this is a check stub for a business checkbook. Personal checkbooks often have just their checks, and then there's another booklet with it there where you fill out your check register. However, in a business checkbook, it's often a pretty big piece of paper. Over here you have your check stub, and then this is perforated and you would have your check. And there's usually 3 of these printed on a page. So when you are making your deposit, you're going to put this right on your check stub, and it goes on the first unused check stub. So this check stub has not been, this check has not been written, check number 1. If this was real, there would still be check number 1 over here. So we're going to write the balance brought forward. Because we were opening our checking account for the very first time, we did not have a previous balance, so that was 0. On the amount deposited line, we're going to write the date. And for this instance, it is August the 1st, 2014. And you can just go ahead and write the numbers here. You don't have to write out the word August. And then the amount of the deposit. Our deposit was for $5,000. Okay, so now we would have our subtotal. So if you had a balance forward, you would add your deposit to the balance forward to get your new subtotal. Ours was 0, so 0 plus 5,000 is going to equal 5,000. We have now recorded our deposit onto our check stub. When we are depositing our checks into the bank, we need to endorse them. So ownership of a check can be transferred by the signature or a stamp on the back of the check. When you deposit a check, you always need to sign it, or businesses will usually use a stamp on the back of the check. This is called an endorsement. How should you sign your endorsement? Exactly on the front of the check. For example, my name is Michelle, spelled with 1 L, which is different than most other Michelles. So a lot of times whenever I receive a check, they will spell Michelle, M-I-C-H-E-L-L-E. What I should do is on the back when I'm endorsing it, I should spell Michelle, M-I-C-H-E-L-L-E. And underneath that, then I should write my correct legal name, which is Michelle, M-I-C-H-E-L-E. So you're always going to sign your endorsement exactly as the front of your check appears. If the check is made to 2 people, if it's made to Bill and Bob, both Bill and Bob must endorse that check before the bank can cash it. If it's made to Bill or Bob, either one of them may be able to sign the back of it and cash it. Okay, we're going to look at our endorsements. The first one we're going to look at is a blank endorsement. A blank endorsement will transfer the ownership of the check to whoever has the check. So whoever is in possession of the check now owns the check with a blank endorsement. It can be cashed by anyone. So you should really only use a blank endorsement when you are at the bank. If you use a blank endorsement and you go ahead and endorse it and then you lose the check before you get to the bank, whoever picks it up can actually legally cash that check and keep the money. So what does a blank endorsement look like? What's the most popular one you see out there? It is just the signature of your first and last name. So if I was to endorse this check and then I dropped it before I got to the bank and you picked it up, you can actually cash this check. So never use a blank endorsement until you are standing inside the bank lobby or you are at the window ready to hand your check through the window to the cashier. I never use a blank endorsement even if I'm putting my checks into a night deposit box. So there are a couple other types of endorsements that are a little safer to use. The next is a special endorsement. A special endorsement looks like this. It says pay to the order of, then who you are giving the check to, and then your name. Now, the check was made to me, and so that's why I have signed it at the bottom. I want to give the check to John Smith so that John Smith can then cash the check. So a special endorsement indicates a new owner of the check. If John was to drop this check and lose it, and someone else picked it up, the only person that can cash it is John. And finally, we have a restrictive endorsement. A restrictive